Good morning and welcome back to Almus Market Mornings. We have started this week with a good bounce in risk assets. One of the primary reasons is the constant divergence within the Fed about the path of rates. Earlier, we were hearing quite a few hawkish voices. Now we are hearing more come out in support of the December rate cut. Yields have come off. 10-year US is again closer to 4%. Equities had a good showing, and even gold had a small rally. Domestically, during a press conference, the RBI governor also hinted at more rate cuts as there remains space to cut, while he mentioned rupees moves have been in line with the historic trends. Good morning, GK. What are your thoughts on yesterday's market moves? Are we seeing markets increasingly confident on a December rate cut by the Fed?
Good morning, Suraj. So, of late, markets have been moving on uh, changing themes on various matters. And, just a couple of weeks back, we had a whole host of analysts calling for top in AI, bubble bursting, all that. And the market did move lower. But then the move lower also stopped at 5% decline and then started finding some base, even as some positive stories have emerged. And as you said, a couple of members from the Fed are now actually backing a December rate cut. Yesterday, we talked about the second most influential member on the board, John Williams, calling for a near-term rate cut, basically hinting at a December rate cut. And yesterday, we had another member, Mary Daly, who actually said that we require another quarter point rate cut in December 9-10 meeting. Even Christopher Waller also said the same thing, preferring rate cut in December. So this story is now influencing the markets higher. And in any case, there was after the fall, we had seen some bargain hunters coming in, and that's actually supported the market. But then this is a year end when you should expect these themes to be actually changing very often. Of course, there is one more story that's building up. Interestingly, is on the Ukraine war. US has recently, rather Trump has, finalized a detailed 28-point peace framework aimed at ending the war in Ukraine. It has elicited, different reactions from Russia and Ukraine. Putin has actually said that they are now ready for a peaceful resolution. And after receiving the plan from US, he has said that it can be a basis for a final discussion. On the other side, Ukraine and Europe remain a bit skeptical. They are actually grouping on the sidelines of G20 meeting for discussing the same in depth, because there see Putin accepting is actually because there are a lot of points that are loaded in Russia's favor, and now Europe and Ukraine are worried about what they have to cede in order to get peaceful resolution. And obviously, there are some clauses which says that Ukraine should give up some territories, and obviously there will be some resistance to that. And moreover, Europe is also worried about the security guarantees in the region. So this is an ongoing discussion, but at least for the market, it's a good thing that the peace process or an attempt towards a resolution is actually started, and therefore that is something that the market is looking ahead to, no doubt. On the stocks, definitely there was a strong recovery in US tech stocks, and nowadays we are actually seeing large moves both sides, and that's actually a sign of volatility and lack of a market searching for a larger direction. I would say that is what is happening on the yields. These rate cut stories are actually keeping them on the downside. However, this week is also a big week for new issuances by the Treasury, and that will keep the demand less. Also, we have important event in UK tomorrow, the budget, and no one will forget, the fiscal problem that the UK has, which had a big impact on the markets in September 2022, and people are quite cautious. Although the markets are steady so far, but they will be anxiously looking ahead to how UK plans to bridge their big fiscal hole, and that's something on the radar for the markets, no doubt. As far as the dollar is concerned, euro has been steady. Surprisingly, there's a clear statement on the euros level from one of the ECB members, Mr. Nagel, who said that the level of euro at 1.16 is not a cause for concern. So at least they are expressing that they are not worried that euro is relatively strong to where it was in the beginning of the year. So that gives some sort of stability to the currency. There have been people who have been calling for fall in the euro because that may work against the European economy. On the yen, there have been repeated statements from Japanese officials. One of the officials yesterday said that Japan can actively intervene in the currency market to mitigate the negative impact of a weak yen. However, this, as I see it, these are only in words, and we're not really seeing any action. And of course, yen has also not been moving crazily. It's been like a steady move, more of a two-way move. So I think authorities will not intervene when such a thing is observed. So yeah, definitely it will become more sensitive if we move closer to 160. And now that's still a bit way away. Sterling holds steady ahead of the budget, of course, tomorrow. Very important event that is looked forward to. On India, there is some damage control to the dent on the sentiment that we saw over the weekend after RBI let the 88.80 level break, and the currency moved almost 1% lower against the USD. Yesterday, RBI kept offering dollars, right from the start of the market, with the spot ending near 89.20 or below 89.20 versus 89.50 seen earlier in the day. So we'll have to keep observing if this level, that level of 89.50 now becomes equivalent of 88.80, which probably they will protect. That is something the market wants to see, but still, it's not helpful that we are still dependent on central bank to provide the dollar liquidity, as the flows are conspicuous by their absence. After in fact, after 2 weeks of better performance by India versus global markets, this week has started the other way. FII flows, which are badly missing, was showing some signs of positivity, a couple of weeks. But then yesterday we saw a sizable selling by them. That would mean more buying pressure on the USDINR as well. Data also shows that the Nifty 50 companies' profit growth is at 12-quarter low. So I think not too much of a positivity, right now. Although we do have still many analysts, global analysts, calling for India to outperform in the coming year. So that is something we'll wait and see. Meantime, the statement from governor about scope for further policy rate cut is definitely helpful in the short term. But then let's also see that the last two rate cuts have not really taken the market anywhere. We are still well below the all-time highs, and stock market at least is not looking at the interest rate cut by RBI as a big boost, not for the time being. Maybe it puts a cap on a rise in the yields for the time being. So the rupee, I think the broader range now should be 89 and 89 half. Perhaps 89 could be tested, but I think importers will be very keen to buy on those levels. So overall, we do have some data from US coming in, the PPI inflation, that is a wholesale number, and also the retail sales. But both of these are somewhat stale because they pertain to September, and what we are looking at to is what happened in October and November, and that picture will not be clear until the middle of December. So we wait for updated, trend in the US economy. The numbers today will just be of more of an academic interest, of course. So as we get into the Thanksgiving week, there'll be some short of liquidity. Market may not be much volatile, but definitely overall markets are very long of uncertainty currently, because there are many factors which are still to play out. A perceived bubble in the stocks, then White House plan on Ukraine war, where it goes, the Supreme Court verdict on the tariff itself is another point to be looked ahead to. So, and of course, the big hole in the US data flow for even for Fed to make their decision. So the policy uncertainty is also around. Yes, market will chug along. I think that's the reason why I think markets will now get more into a rangy scenario until the year end. Thank you.
Thank you, JK. And yeah, increasingly influential voices in the Fed backing a rate cut. John Williams, very Daly, Waller, they have come up, and that's sort of influencing where the markets are also seeing the rates. The December rate cut probabilities have also gone up, currently around 70%. It was at a time below 50% as well. So that's something interesting which is developing. We have some updates on the Ukraine war front, 28-point plan suggested by President Trump. It has garnered some reaction from various countries. Ukraine and Europe, of course, remain skeptical because a few points seem to be in favor of Russia. So that development will be keenly looked at as well. Otherwise, we saw risk assets posing a strong recovery, yields moving lower. But there's a big issuance coming up when it comes to the bonds, so that may keep it sticky. Important event tomorrow is the UK budget. Just for our listeners, recall in 2022, we had the Liz Truss moment, and markets will be keenly looking at how the UK plugs its fiscal hole. On the domestic markets front, Rupee saw some support by the central bank, with the central bank offering dollars around 89.20 levels. Since flows are dry, market is quite dependent on how the central bank provides this dollar liquidity. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.